BKNG is going through a stock split. The stock report published the wrong data, leaving people to believe the stock is going up by $4,000. I'm Marie Ames, and today we are talking about Booking Holdings, ticker BKNG, because this stock has been generating a lot of buzz. And unfortunately, some of that buzz is based on a number that is flat out wrong. I actually brought this up during our live meeting on Saturday, and several of you had already seen the screenshot going around. So I want to do a dedicated video on it because this is exactly the kind of thing I started this channel to address. When numbers go viral without context, people make bad decisions. We are not going to do that here. Let's start at the beginning. Booking Holdings is the parent company behind Booking.com, Priceline, Agoda, Kayak, and OpenTable. It operates in over 220 countries and territories and is one of the most dominant companies in global online travel. For a long time, it was also one of the most expensive stocks on the market, trading around $4,100 per share before this month. That changed on April 2nd, 2026, when Booking Holdings completed a 25-for-1 forward stock split. Split-adjusted trading began on April 6th. What that means is that every share that used to cost around $4,100 was divided into 25 shares. If you held one share before the split, you now hold 25. The company's total value did not change. Only the per share price changed. And that is why BKNG is now trading in the $190 range. Now, here is where the confusion comes in, and this is what I flagged on Saturday. There is a screenshot circulating from a financial data site showing that the average analyst price target for BKNG is $4,703. and that this represents a 2,349% increase from the current price. Dividend friends, that number has not been adjusted for the stock split. The analysts set those targets when the stock was trading at over $4,000 per share. The data site pulled those old numbers and compared them to the new post-split price without adjusting them. So you get a completely misleading percentage. The correct way to read analyst targets for a post-split stock is to divide those pre-split targets by 25. When you do that math, the average price target lands somewhere in the range of 180 right dollars to 250 per share, depending on which analyst you are looking at. That is a reasonable, modest upside from the current price. Not 2,349%. I want to say this clearly. If you saw that screenshot and got excited, I understand why. A 2,349% return sounds incredible, but it is a data error, and I would rather you hear it from me than find out after making a financial decision based on it. Now, here is the part of this story that actually is exciting, and it is something I also touched on during Saturday's live. Booking Holdings just initiated a quarterly dividend. For most of its history, BKNG did not pay a dividend at all. The company preferred to return cash to shareholders through buybacks. But alongside its strong fourth quarter 2025 earnings report, the board declared a quarterly cash dividend of $10.50 per share. That is the pre-split number. Post-split, that works out to 42 cents per quarter, or approximately $1.68 per year. At the current price, that is a yield of roughly 0.7% I know some of you are going to say that is a low yield, and you are right. If you are building a pure income portfolio today, BKNG is not going to do the heavy lifting for you. But here is what I want you to see. The company reported 2025 revenue of $26.9 billion, up 13% year over year. Free cash flow was $9.1 billion. Adjusted EBITDA was $9.9 billion with nearly a 37% margin, and the dividend payout ratio sits at just 17%. That means Booking Holdings is paying out a very small fraction of what it earns. That is the foundation for a dividend that can grow significantly over time. We have talked many times on this channel about dividend growth investing versus chasing yield. A company that starts a dividend at under 1% and grows it consistently over 5 to 10 years can become one of your best performers. That is the story worth watching with BKNG. The travel industry is also in a strong position. Despite economic uncertainty, travel demand has remained resilient. Booking Holdings is investing heavily in AI tools that are already reducing their average cost per booking. The business is running efficiently and generating serious cash. So to summarize what we covered today and what we first talked about on Saturday, the forecast you may have seen is not real. It is a data error caused by pre-split analyst price targets being compared to a post-split stock price. The real analyst targets, properly adjusted, suggest a modest upside from current prices. What is real and worth paying attention to is the new dividend, the very low payout ratio, the strong free cash flow, and the long runway for dividend growth. I will be keeping an eye on BKNG going forward, and will update the T family as new information comes in. If you have questions, drop them in the comments, and if this video helped you, please share it with someone who saw that screenshot and is wondering what to make of it.